You all must be knowing what is happening with the stock market for last 1 week. Since the US election started, it was very volatile and it was very unpredictable. The election was done. I mean, the counting is still going on, but we still do not have a clear winner. We have a clear winner, but it has been not declared yet. So what we have seen in the global market is that the market's still going high. A bull is still taking the rally. The market is on a very optimistic condition. So Monday would be a very eventful day for us in Nifty. Let's wait what will happen, and we'll see what will happen in Nifty. I mean, just imagine from February 2020, there was a huge dip because of COVID, but all of a sudden we have seen the Nifty is being climbing up now on a new heights, record heights. So it's even touching 12,250 and plus. So let's see how the next week will be. We are just waiting for the drama from the Trump to go on. Then we will see what will happen in the market, right? But yeah, truly it was very eventful day. I mean, the whole week was very eventful. Those who were very confident and had a clear picture about the market has made a lot of money in that week, especially the people who have taken futures and options in Bank Nifty and so on. Banks were rallying like crazy. They were jumping like 400, 500 points in a day. So we hope the next week will also continue to give us some more good merits to be very positive for next week, unless some drama from Donald Trump happens. Yes, we will not personally support any particular broking system here. I saw some comments from Mr. Atul talking about angel broking. Please understand, in the last 1 week, when there was huge surge of trading that happening in the country, there were not only angel broking, but I also use Substock and Zerodha. So we also had some technical glitches in the systems. These servers were heavy loaded because all of a sudden everyone entering into trade marketing, right? In 2020 itself, we have more than 6 million people who entered in trading. So that also gives an additional weightage to the servers. So we are not talking about any particular in broking systems here. Our aim, our community aim is to learn the stock market and go ahead and earn profit together. I'm not here to tell you whether angel broking is good or Upstock is good or Zerodha is good. I'm here to tell you what we can do in trading. How do we do a good trades? What is stock market? How do we need to invest carefully without losing money, right? Please understand, in stock market, having profit and having loss is possible and it is must. There is nobody who only makes profit. People who makes profit, one day or other day, they will definitely make losses also. Stock market, everyone has to face losses and profit. But the aim is, our intentions and our efforts are to make more profit than the losses. So how can we do that? We can just have more understanding about how the market works, how the technical analysis work, how the fundamental analysis need to be done, and choose the correct stocks for our investments. Then we do all this, when we apply all this knowledge, then definitely your profits will be higher than that of your losses. Your net profit will be in positive digits. Okay, so today what I really wanted to explain to everyone is we've done almost 6 classes already. We have done 6 units, which is uploaded to our Facebook page. That was the basic, how stock market functions and what is stock market is, how the trading happens, and so on. In today, this would be our first interactive session. You can comment your questions and your concerns. I would try to answer them. So this would be our first interactive sessions. Going forward, we will have more interactive sessions. We will have trainings, coachings, and webinars to have real informations and correct informations so that we can learn trade market or stock market from very basics to a very professional level. So today is my effort, and we're going to discuss about candlestick charts, right? Everyone who enters to a stock market, they are very worried about seeing this colorful chart, red and green. So people often don't understand what this is. They just follow the traditional Googled or YouTube videos, and they just apply their theory of investments. But if you actually look into stock market, The stock market fundamentals are in those charts. If you can identify and if you can read the chart, which is candlestick charts, then your investment will be in a good place and you can have a smart investment made. So today I would try to show you what a chart is, how a chart is formed, what we can predict from a candlestick charts. Okay, I'm going to tell you candlelight dinner. Sorry for that. Okay, so without wasting the time, let's get into topic now. I would try to cover this video probably in 20 minutes maximum. This would be the basic of what candle charts are. Once we know the basics of candlestick charts, then we will have a more informative videos uploaded on this chart. So the purpose is here we are together and we can discuss together. And if you have any questions during this time, you can shoot the questions. I'll try to answer those questions. If not, during the topic that we're going to discuss today, you can have the questions or you can read these videos and the notes that I'll be providing here. Then you can have the questions prepared for the next week. So I'll try to connect with you mostly on every week, once in a week, so that you and me will be together in same platform and same understandings, right? Thank you, Mr. Ramesh Kumar. Welcome to the show. You've been a little bit late, but we are not started yet, so you're on time, I can say. So let's try to understand what candle charts are. So please understand, some of you would be professional traders, or some of you must be doing the trading for last couple of months. There are people who are just started, so we would try to focus on them too. So many information that I would be sharing with you must be knowing to you already, but bear with me so that our colleagues and our friends also will travel with us in this journey, and they will also acquire the same knowledge that we have. Okay. First of all, what is this candlelight, right? Anything that we need to analyze, okay? This is the fundamental of any economical analysis or any financial analysis. Anything that we need to analyze over a period of time, we need to know the trends for a particular time interval. That means if I want to know a share price, how is that share price performing in the stock market over a valid period of time, maybe 1 month, 2 months, 1 year, I need to know the price for every particular time, right? So for an example, if I take an example of Reliance. Reliance was trading at around 850 rupees, 900 rupees in March, April. So I want to know how the price of Reliance changed from March to now over a period of every day, how it performed every day. So what will I do? I will take an average price of Reliance for every day. Then I put every day and the price of Reliance on every day. Then I try to make a line above this. So that's what normal charts that we've seen, right? Are you getting confused? Let me show you on that in real trading platforms. Okay, I'll take you to a trading platform now. I was doing some research on our US election now, so I'll just ignore this tab. I'll show you the real live screen from Angel Broking. So we'll try and see how a chart functions and what we can understand from candlestick charts. Okay, let me share my screen with you. Just comment me if you can see my screen, okay? This is my first time I'm doing a Facebook Live. I normally used to do webinars on Google Meet and on Microsoft Teams. So bear with me. Okay, probably I think you can see the trading platform right now. So here, let me search for a particular stock. Let's say Reliance is my favorite all time. So I'll put Reliance first. Just opening the Reliance chart, okay? So I hope you can see the Reliance chart now. This is what our basic fundamental analysis happens. This is a place where our fundamental analysis happens. I'm sorry, theoretical analysis happens in stock market. Many of us do not give attention to this chart on a larger window. We only look for today, except for intraday. You really need to understand what does each candle means, okay? So when you open any particular stock's price chart, you can see this graph, okay? This can be of different. So normally, this is what the graph that we are familiar with. If we discuss about any financial analysis, this type of graph is what we are familiar with. If I take this chart, what I can understand from each day, okay, let me make you familiar with what is this chart is all about. The chart shows different days price of Reliance share from 10 a.m. of 5th of November to 3 p.m. on 6th of November. You can see a date change here, right? So this window is for 5th of November. This is for 6th of November. And these prices are the closing price of every 5th minute. Okay. So these are the charts. These are the chart which these are dotted lines of the price of Reliance over this period of time. If I take this as one day, and if I can show you 1 month chart. So this is where the chart period time interval shows from here. This is where we decide what period of chart that we need to look into. Okay, so here you can look into 1 day chart, 5 days chart, 1 month's chart, and 3 months, and so on. So if I'm looking at 1 month chart, and then I can also define what time interval within that 1 month I need to see the closing prices. So I can put 2 hours, 1 hours, or so in 1 month, I'm looking into 1 day. That means in the month of October 1st to November 6th, I can see the price of Reliance on each day. So if I click on here, I can see the price is around 2250, 2,257 rupees. That was the price at which Reliance traded on that particular day, which is 10th of 7th of October. Okay, so this is 7th of October. So these lines are showing the price of the closing price of the share on that particular day. But what will I do only with the closing price of the stock? I need to know much more details. That's why we change the chart into candle chart. Let's make it very simple. Let's look for 1 day. 1 day means it's a chart from the last day, which is 6th. Okay, yesterday definitely, today definitely the market was closed. So yesterday's chart is here. So I'm looking into 1 day period, okay, starting from morning 9:15 to 3:30. I'm looking into a 5-minute candle. Okay, this means here you can see different colored rectangular shape charts. These are called candle. Each one is called one candle. Because I choose 5-minute here, these candles are of 5 minutes. Are you understanding? So these are 5-minute candles. So we have so many 5 minutes candles here. Now, why this candle having different shapes? Some are with long lines, some are with one full rectangular shape, and some are green, some are red. What does these colors and the shape means? That's what we are going to understand in today's video. I'm just going back to check if anyone has any questions. Okay. Right. So far, no questions. If you have any questions, if you are not able to understand what I'm explaining, don't hesitate to ask me. Okay. Unless you ask, I don't understand, right? Whether you're understanding or not. So please don't hesitate. Please ask the questions, whatever question it is. Please ask. There is nothing like a stupid question. If you don't ask questions, there are 2 reasons. One, you understand everything. Other thing is that you don't understand anything. So please ask questions if you have any doubts. I'm happy to repeat again and again. So what we are going back to the charts, what we are saying right now here is such Reliance I start for 1 day of time with a 5-minute time interval. Okay. Now, to explain you why this is in green and red, let's start from that. Okay. A green color chart or green color candle shows a positive response from the market or increased demand from the market. That means when there is a green candle, that means there are a lot of people who shows interest to buy the share. When it is a green color candle, that means the amount of people who are showing interest are more than that of people who are showing interest to sell the shares. The demand increases and thus the price increases. Do you remember this principle from our second video? If you have not seen that video, please go back and watch all the units that we have done so far. The links will be in my playlist. Please watch those videos. Okay, we will be using many jargons and many basic rules from those videos. So when there is a lot of demand, the price of the stock goes up. So when the price goes up, what happens in that? Okay, let's change this into 1 minute video, so it will be very easy for you to understand. Now, in 1 minute video, let's go to the first minute of yesterday, which was at 9:15. Okay, so we'll go with very basic. So at 9:15, when market opened, okay, Reliance share was opened at a price of 19. It was opened at a price of 1989. So when you see the opening price, okay, 1989 was the opening price. From that price, if demand decreases, that means everyone want to sell off. That's where the demand decreases, right? Nobody want to buy it. So from the opening price, the demand decreases, which means price goes down, right? So when the time is at 9:16, because I've selected 1 minute here, if the price of the share is below than the opening price, it opened at 19,989, but it closed at 9:16 at 1981. That means around 10 rupees decreased in Reliance share. So whenever the closing price of the share is lower than the opening price, that means that the demand is decreasing and the closing price is lower than the opening price, the chart will give you a red color. Okay, and whenever the price of the share increases because there is a demand increased in that particular time, suppose in the second minute, that is from 9:16 to 9:17 for Reliance, if you see, the stock opened at 1978 here. Okay, in 1978, the at 9 minutes 16 minutes, the price of the Reliance share was 1978. So in that minute, from 9 minutes 9:16 to 9:17, that 1 minute, the price increased from the opening price. The closing price were above the opening price. At 9:16, the price was 1978, but at 9:17, the price increased to 1989. So whenever the closing price increases above the opening price, that means the demand increases. So when the demand increases, the price increases, and the chart gives you a green color. In simple language, when your closing price is lower than the opening price, the chart is in red color and shows a negativity in the market and shows the decrease in demand in the market. When a chart, when a candle is in green color, the demand increases, the price increases, and thus the share price also increases. Okay, so that's the difference between a red color candle and a green color candle. So what are these lines that you can see above or below these candles, right? So we talked about an opening price, we talked about a closing price. So if the closing price is above the opening price, the chart is green, the candle is green color. And if the closing price is below the opening price, the candle is red color. What are those lines which is showing? So these lines which is showing are, if it is downside, that shows the lowest price. So from an opening price, if the price decreases and then goes up, so the lower lines are showing the lowest price and the above lines are showing you highest price. Am I confusing you? Let me try to explain you in a different way. Probably you will understand that better. Okay, let me show you that too. And okay, there's a question. Does the chart show live status? Yes, the chart shows real-time demand changes in the market. So when the market opens, so market opens at 9:15 and then market closes at 3:30. So during this time, the chart definitely works based on the real-time actions that is happening in the stock market. So when there is a huge, suppose what happens especially is there is a news which came in all of a sudden, probably a company announced its results of profitability, then all of a sudden there will be a lot of people who is interested to buy the stocks. They will keep on buying the stocks because it's a profitable company. Then immediately the stock price goes up. That's exactly what happened in bank SBI cases, if you remember, in 2 days before. When the SBI declared the profit, the stock price of SBI jumped from 198 to 220. Do you remember that? It was a big rally. Okay, so what I'm going to show you right now is I'm going to show you a simple explanation of what we discussed on the chart. Okay, probably that will make you more understanding about what we're discussing now. Okay. Give me one quick minute. Okay, let me just open. I thought I'll put another video on this, but because we are discussing this now, I can also show you this right now. So it'll be very easy for you to watch the video when I upload the videos, and it'll be very easy for you to understand the video then. Okay, so I hope you can see the screen now. Yeah. So this is exactly what we discussed now. At the time, here this is a different company example. So don't worry about these numbers that you're seeing here. So when a price, so exactly if you look at the graph shown here, the graph shows an opening price of a stock, right? Then it also shows a closing price of the stock. You can see the red circles here. So at 9:15 a.m., the price was 100 rupees, but at 9:59 seconds, that means just before 9:16, the price become 102.8, yeah, almost. So in that 1 minute, so many trades happens, and the price kept on fluctuating. And from the opening price, the closing price was on the higher side. But we also know there is one point, at one point, the price was the extreme high. You see there is a high price and a low price, right? That's 9:15, 47 seconds, 47 microseconds. You can see there was a price of 105 almost. And then just immediately after that, the price was around 98 rupees. So in 9:15 to 9:16, the price of that share went very fluctuating. At one point, it hit the highest price, and at one point, it hit the lowest price. Okay. Now, you actually crunch this chart. This crunched into a 1 minute candle. From a 1 minute where we had 60 prices, now I crunch this into 1 minute, one candle that has four major prices indicators. One is your opening price, then we have closing price, then we also have highest price and the lowest price. So if I take these 4 points, okay, what are these four prices from that one particular minute? We took four prices, right? Opening price, closing price, highest price, and the lowest price. We don't need other prices in between. We just need opening price, closing price, highest price, and lowest price from a time period. So you see the highest price would be the highest price in that particular time interval and will be the highest price, right? Then we have a lowest price. Then we have an opening price and a closing price. So when I try to make a candle out of these four prices, that looks like this. Have you understood what is highest price and what is lowest price? A square is made between opening price and the closing price. And based on the closing price location, the color of the body changes. So the square between opening price and closing price here, if you see in the chart, the opening price and the closing price, this is where the color gets filled. Okay, if color is getting filled here is red, that means the closing price is below the opening price. The color is green, the closing price is above the opening price. Let's explain that in picturization, right? Picturization is easy to remember things. So likewise, what we discussed, I'm just going to repeat what we discussed again. If the closing price is above opening price, if you look at the graph, you can see that. If you see in the pictures, the closing price is above the opening price, that means the demand increased, price increased, then the color of the chart should be, yes, it should be green, because the demand increased, price increased in that one particular minute. Okay. Similar way, if the closing price is lower than the open price, then that means the demand decreases, more people want to sell off their shares for some reason, and then the price of the share also decreases. In that case, the color of the candle will be red. Correct? Hope you understand so far. If not, please ask questions. Okay. So now we know the color of the graph, right? The color of the candles. It is from the difference between opening price and closing price. But sometimes this high price and low price would be same to or equal to the opening price or closing price. In such cases, the graph can also be seen like this. Don't worry, I will upload this video separately with more explanations and examples. This is only to explain you right now on one-to-one, right? So that if you have any questions, you can still ask me, and that I'll include those points also into the videos. So if you see the last four candles here, there is no lines as shown in the first two, right? Because the closing price and high price is same, or the opening price and the lowest price is same. These are the 6 type of candles that you can see in the charts. These are the only 6 type of candles that you can find in the charts. Now let's try to understand what each of this means. I mean, we know what it means. We know the color defines the demand, right? Whether the high prices keep on increasing or prices decreasing, whether the demand is increasing or demand is decreasing, we know that. But sometimes, likewise, if you see on the third one, the closing price, the third candle I'm talking about, the closing price and the high price is same. That means there is no high. When the market opened, the highest price was the close price. So here, what does that mean? This means there is a huge fight between the buyers and the sellers. Did not understand? I'll explain again. If you clearly look into the video, look into the close, the third candle, where close price and the high price is same, which means the highest price was the close price. What does it mean? It means the price is going to increase further, isn't it? Because at the time of closing, the share price was at high. So when the next minute starts, the price supposed to be increasing more, isn't it? Right or not? So that's how, yeah, that's how you really need to understand each candles. Similarly, on the fourth one, if you look at the fourth candle, where open price is the lowest price. What does that mean? When the open price is the lowest price, that means after opening, the price never went down. It only kept on increasing, right? That shows further positivity. That means the price never went below the opening price. There is a positive market. There is a more optimistic market. There are so much demand further for that particular share. So these are simple things. Likewise, if I look at the second last candle, where open price and high is same. What does that mean? Opening price was the highest price. After that, the price kept on decreasing. It means the demand is going down, right? So each candle like this have stories. So these are stories of single candles. But these candles tells a story by themselves. First, they tells you the opening price and closing price, and they gives you the real picture of demand, whether it is positive demand or a negative demand, or the price is increasing or price is decreasing. It also tells you what would be the next candle look like, right? If as I said an example on third and fourth candle, it can also give you an indication of what would be the next candle looks like, which means what would be next minute look like. Understand? So if I'm doing an intraday trading, and if I see a candle like the third candle, where close price and high price is same, I definitely know the next candle 90% should be an increasing price, isn't it? So that's how we make the predictions out of these candles. We cannot do these predictions from the line candles, because line candles only gives you one closing price. It doesn't gives you the understanding of trend. Okay, so the candle itself tells you a story. It itself gives you an indication for your next moment or the next particular minute what is going to happen. Similarly, when you have two candles together or three candles together, they also tells you what will happen in next 2 minutes or 3 minutes. This is very informative and very important data that you need to understand by heart, or you do homework or you do impositions, but you need to learn this. Without you learning these charts, without you learning these candle charts, trust me, you can do a long-term investment, but your short-term thing in intradays will not work perfectly. But if you can understand this, believe me, it's a bit difficult to learn, but if you learn this, it will be very easy for you to trade like this, and you can make extra profits in intraday trading. Okay, so what I'm trying to tell you is, it's don't enter into a trade with your gut feelings. Don't enter into a trade with your emotions. Don't enter into a trade because someone is telling you to do. What is our intention? Our intention is not just to make money. I can give you everyday recommendations. You can do the trades, and I'm telling you, you may make 90% profits, 10% may make losses. But that's not what I want you to do. What do I want you to do? I want you to learn, and I want you to invest yourself. I want you to do a trading for your whole life, and I want you to become a professional trader. Because in this community, there is a lot of rumors, there is a lot of false information that stock market is a place where you lose money. Nobody talks that, oh yeah, stock market is really good, let's make some profit out of it. Everyone says, oh, stock market, don't do that, you'll lose money. We need to change that, right? You know why? Who loses the money? The people who believes in gut feelings, and the people who goes with emotional investments loses money. They never apply all the strategies. What mistake we all do is, when we see an opportunity, and if it is past, we still try to hit that opportunity. Guys, stock market has 10,000 millions of opportunities every day. If you lost a perfect opportunity, leave it. Wait for next perfect opportunity. Only invest in a perfect opportunities. Don't jump in between. If you lost it, leave it. You will get another perfect opportunity very shortly. But we all make this mistake of, even if it is past, we still try our lucks. Don't do that. Okay. Okay, so I'm not going to make the story long here, but I'll definitely upload the next videos on this same topic. How do the charts communicate to you what market will be look like, and how do we predict the market movements based on these charts? One chart can tell you what is going to happen in next minute or next day, right? We can. I'm going back to the this screen from our live session, a trading session, trading platform, which the reason is we can have these charts for 1 minute, or even for 1 day, or for 1 week, and so on. So likewise, if I take this, give me 1 minute. So in this chart, what I've shown you is of 1 minute, right? So when you're entering to an intraday, I recommend you to look for 1 minute, 3 minute, and 5 minute time intervals to tell you what the trend looks like. If I look at on the 6th, the Reliance was, we talked about it, the market was really volatile. The price jumped from 1975 to 2050, right? Almost like 150 rupees differences. So this shows 1 minute. Okay, let's go back and check what we discussed in the last 10 minutes. So you look at this. We talked about this. Here the closing price, and okay, let me see if I can have a perfect examples, because the market was not correctly. Let's see here. You see this all? Okay, I'm trying to zoom it. Here, the market opened at this price. Okay, look at the charts. Okay, the market opened at this price, which is around 2004 rupees, and kept on increasing, and it went up to 2005. So the price increasing, the demand is increasing, right? So the next moment, the price supposed to be increasing, then it's supposed to be increasing, but here you see the size of the candle decrease, the green color decrease. That means there is no huge demand. The demand is now decreased, and further was bit of resistance from the sellers. Someone who purchased here or someone who purchased here must be selling off their shares here and making a profit in intraday. Then further it went on increasing, right? So normally this trend follows, but in a volatile market, it is again difficult to look only to one candle. Don't do trading on Monday, only looking into one chart, one candle, okay? Because I told you that one candle can predict the next minute or the minute after. You have to hold on. It's not only one. In stock market, you cannot apply one theory or one technique at a time. You have to have multiple indicators to take your positions, okay? So I'm trying to tell you one by one. This first point is that each candle tells you what is going to happen next minute. But to validate that, you have to look into the second strategy or the second indicators, which is a story about the two candles or the three candles, okay? Yeah, great. So here we are looking into 1 minute, which can be used for your intraday tradings. This 1 minute can be changed to say 30 minutes. The number of candles decreases. So from so you see more times are more days are being shown here. If it is 30 minutes on 6th, you can see every 30 minutes when the 30 minutes starts, what was the opening price, what was the closing price, what was the lowest price and highest price. Yeah? And we can change that into say 1 hour or even to 1 day or even to 1 week or 1 month. So this is based on what trade are you going to take, what position are you going to take. Are you going to take a long-term investment? Then definitely I would recommend you to take at least 1 month or 1 days or 1 week's, the larger windows candles. If you're looking for a small short-term investments or intraday, then I would prefer you to take 3 days, 5 days, 7 days, 1 minute, 15 minute and 10 minute candles. Okay, so it's based on what you're going to invest, what is your trading style. Based on that, the candle can be customized. Okay, let me just go back and see if anyone has more questions. Okay, right. Let me. Now I will. I've seen many of us are doing intraday trades, so which is my favorite too. I'll give you 2 tips today before we wind up for today. Then we'll connect again in next week. Let me show you what I do in intraday tradings. Okay, again, it is not applicable on a volatile date. On volatile date, no studies or no pattern tracking can be done. In a normal day, if it is a normal season, for an intraday, you can go to your studies. Okay, from intraday, you can put moving average. You can put moving average of 20, and I choose normally an exponential moving average. You can just put this, we will explain on another video what this means, but for now you can just blindly follow it. 20, and then you can add one more moving average, which is 4, 5 on a exponential. I'll change the color to green in this case. Done. So what does it shows now is, in the, let me go back to 1 minute because I'm looking into intraday, right? For 1 day. Let's go back some days in past. So when the green line is above the red line, okay, let's see the yesterday itself. When the green line is above the red line, this means the market is on a positive trend. Okay, the price is supposed to be higher. It's not supposed to be falling. It's only supposed to be increasing. That means the market demand is higher than that of the market demand is higher, and thus the price will be higher. When the green line crosses the red line, suppose here, let's see, it's the last, very last minute, but let's see here. When the green line crosses the red line, which means demand is decreasing, which means the price will go down, which means in intraday you can do a short sell. Suppose when you see this crossing happening, you can actually sell off shares here at whatever price which is shown at the crossing. So you can sell shares at 2030 or 2030 rupees. Then you can see all of a sudden the price goes even beyond, right? So when a green line is crossing the red line, that means there is a demand change. If it is going down, that means demand is going down, and when it is going up, demand is increasing. Let's go back and check in one time in history somewhere, maybe. Okay, here, let's see. Okay, this is which date? So 29th of October. You see, when the green line crosses the red line, then the price kept on increasing. So when you see this indication of green line crossing red line here, you could have actually purchased here because green line is moving up. So if you purchase here at whatever price, which is approximately 2010 rupees, then the green line is going up. You need to track the movement of green line, and it is going up and going up and going up, and it is falling from here. So this means there's a fall which is going to happen. But then you can sell your profit here. You can book your profit here by selling at almost 2030 rupees, right? So from a 2010, 2030, you could have got 20 rupees profit in that share, in one share. So again, it crossed here and it is going down. So you can sell off from here. It goes down. The price is even touching into these levels. You can sell it off and book your profit here. This is one indicator. We call it as moving average strategy. Okay. Along with this, remember, along with this, I also apply something called MACD. What is MACD and how is this calculated? We'll explain later. For now, you can choose MACD to ensure these movements are absolutely correct. Sometimes it gives some kind of uncertainty. Sometimes it doesn't work. Sometimes it breaks and immediately comes back. So to be ensured, you can add one more study, which is MACD. Okay, MACD is an underlay. It's an oscillator. Okay, we'll talk about oscillators and all this detail. Whatever I know, guys, I will definitely tell you. Okay, for now, let's see what is. I'm just trying to make it a little bit larger. Okay, so that you would be able to see what does this mean. Let me try to put it up. Okay, so here it's based, you see this, the two lines. Okay, it will be on your graph, it will be on the bottom side. This is called MACD lines. So there are two lines, one bluish black color or one is red color. So this also works like our moving average, but this is based on the volume. So there is some strategy and some calculations on the MACD. I will explain you what the calculations are and how it functions. But right now, what you need to understand is similarly like what we learned about moving average, when there is a crossover of the black line or the blue line over red line, that means there is a trend change. If you see, let's take an example from some days in past. So let's see here. Here we saw the green line is crossing the red line, which means you will be technically selling off here, doing a short sell here of your shares, and then you're waiting for profit booking. Similarly, you see the blue line is cutting off or crossing over the red line here. These two lines are working together, means it's a very strong indication. Isn't it a strong indication? Indeed, it was a strong indication. From a price of around 2038, a profit of 1990. There was a huge drop in price here. So this crossover of moving average is also been supported by MACD crossover, right? So this is what you really need to understand. If you actually closely monitor, there was a slight crossover on the price here. So you would have actually booked your profit here also. And similarly, there was a crossover in the MACD. So if MACD and the moving crossovers are matching together and supporting each other, then you need to look for one more indicator. You see how complicated it is. That is your volume chart. chart indicates the number of shares being traded in every second. So when there was a drop in the demand, when the moving average crossed over, the MACD crossed over, there was a huge volume of shares that has been traded, right? So if there is a huge volume of shares that has been traded, that indicates that the pattern or there is a change in the trend. Okay, so here we are looking into moving average. We are also looking into MACD. We are also looking into volume. So before you taking into decisions, you have to ensure your decision is correct and right and appropriate. For that, you need to have these indicators supporting your movement, your action. Okay, am I boring? It's a bit boring now, right? Okay, it's been almost 1 hour now. So for today, we would close it here. Meanwhile, if you have interval, could you explain? Okay, there was one more question about the interval. That means, so we talked about the candle, right? In 1 minute. So interval is a time we specified as per the user. Anyone can specify. You can specify, I can specify, or any trader can specify an interval as 1 minute, 1 hour, or 1 day, or 1 month. So what happens? What I'm trying to say is an interval means a period of time at which you will look only into 4 prices: opening price, closing price, highest price, and lowest price. If I'm saying the time interval is 1 minute, that means in that 1 minute time, what was the highest price, what was the lowest price, what was the closing price, and what was the opening price. So that 1 minute is called one interval. So we can have 1 minute as one interval, we can have 30 minutes as one interval, we can have 1 day as one interval, or 1 month as one interval. So we define this interval based on what trade we want to take. Are we going to do a same day trading? Then we have to ensure our intervals are of 1 minute or 5 minutes or 15 minutes maximum. In 1 day, same day trading, in intraday trading, you cannot decide your strategies based on 1 month interval, right? It has to be 1 minute or 3 minutes or 5 minutes. Then only you can see a chart pattern. Then only you can see a trend, right? So that should be the interval means. But if you're looking for a long-term investment, that means you're investing today for next 10 years, you don't need to look into every 1 minute. There you can decide your interval would be approximately say 1 month or 1 week or say 3 months. That could be your interval. That interval you can decide and you can customize your chart to be matching with your time interval. So if you're not seen, how do you see your time interval in a chart? So if you're seeing this chart now, here you see, this is the place where you can decide what should be your interval of your candle. Do you want the candle for 1 minute? Do you want the candle for 5 minutes? Or do you want the candle for 1 week? That you can decide from here. So I'll explain this with one more example. If I take 1 minute and if I take 1 day, the candle here showing me, okay, I'm just look into this portion. This is 1 minute, let's say 1 minute. So from 9:15, let me just zoom out a little bit. Okay, on 6th of November, that was on yesterday, every candle shows the price actions of that particular 1 minute between 9:15 to 3:30 in yesterday. But if I change this to 1 day, here you see there's so many candles, right? If I change this into 1 day, what happens? The 6th, which was yesterday, will only have 1 candle. So if you see, this is 5th, this is 6th. 6th now only have 1 candle. We don't have so many minute candle because the time interval I selected as 1 day. So on 6th, we only have 1 candle. So here is the opening price. The market opened at this price, market closed at this price, but market went as high as this and as low as this. Decide. So now this is 6th, this is 5th of November, 4th of November, 3rd of November, 1st of November, and so on. So this is what we define as interval. Okay, it's a trading session. So that is one day here. Hope that clears your doubts. Okay, so that's all for today. We'll connect again probably next week. Meanwhile, if you have any more questions, please do not hesitate to ask me. Some more questions coming in. It's again about intraday. Okay, intraday. How do we see in futures? Can you explain futures? Okay, there's a question. Okay. Mr. Ajay, so Ajay had a question about, can you explain the different securities that you can trade in share market? Okay, this is the basic stuff. So I think Mr. Ajay has not seen our video before. In stock market, what you can trade. Okay, so I'll take another 5 minutes to explain this and then we'll wind up today. Okay, in stock market, it's an online platform where you can trade different things. If you ask me, you can trade so many things in stock market. The first and most important thing is the company shares. So you can buy the shares of a company, you can sell the shares of a company. So different companies put their shares in the market. Anyone can buy those shares at that price which is happening in that particular moment. The price of the shares keep on increasing and decreasing based on the demand. So you can buy a share of a company. That means you are part of the owners of that company now. So when a company makes a profit, you get the profit share also. That's called dividends. So you keep the share with you. And when the company is making a lot of profit, the company's value goes up, the share price goes up. When the price goes up, you can cross sell or you can sell over these shares that you're holding. So the difference between your purchased value and the sold value is your profit. That's shares. We call it as equities or cash market. Now, there is something called futures. Futures are not like shares, but they are traded like shares. Futures are basically the contract or an agreement. How do I? Okay, let me ask you this question. If you do a real estate programs, okay, if you're going to sell a flat, we give tokens, right? We give tokens and say, I book it and I will buy it in next month or in 6 months. Similarly, the futures are a contract made between a buyer and a seller, saying that for this particular company's this share, I will purchase on this particular day at this price. Suppose if I make a contract of future, if I buy a future from the market for SBI, I says that SBI share on 30th of November, I will buy at 132 rupees. So why should I do a future contract? Because I think if I'm buying at 132, I think the future on the 30th of November, the SBI price will go above 132. But the person who's selling me this share thinks that the price will go beyond less than 132. So there is two perception of people, which is converted into a future contract. Then I make this contract and I pay I make this agreement. See here, you don't need to pay the full amount. You just pay a part of we only give the tokens in real estate, right? Like that, I don't need to pay full amount. I can just pay small amount and make this contract active. So I said I will buy at 132. But tomorrow, if someone else is saying that I will pay you at 136, I can sell this contract to him. But in real estate, it doesn't happen. That means I just become a middleman from someone who's told me that he can sell me at 132. I've given to someone 136 at 136. So I get a profit of 4 rupees straight away, right? So here there is no stock which is traded. These are called futures. Futures are securities. Like we said, stocks are equities. Futures are securities. Securities means the price, the value of this particular security that has been traded is coming from an underlying asset. So here the SBI share is not been traded, but a contract is traded on behalf of the SBI shares. So the value of the contract derived from the SBI share or the undervaluing asset, but the shares have not been traded. So only difference is here that you will not get any dividend from the company. The profit sharing is not happening. You are not becoming the owner of the company, part of the owner of the company, because you don't have the shares. You only have a contract. Okay. So what happens on that particular day when it is happening? Likewise, the agreement, the last day of the expiry, that particular day, either you have to buy the shares or sell the shares. Then it just become like you're an owner of the company. You can get the shares. But normally in futures, nobody does the share transfers. They only do settlement with money. Don't worry, we'll do another videos on future and options. But for the moment, you understand futures or options are not stocks. They don't make you owner of any company. They don't give you any dividends. Those are securities which for which the value coming from an underlying asset. Okay. My favorite is futures. I'll tell you later because those who are doing intraday, I'll tell you, you can do intraday in futures. I mean, you can do delivery in futures just like intraday. Why intraday is very favorite for you? Because you can do a short sell. In delivery, you cannot do short sell, right? I'm just talking to the people who are doing intraday. Others will explain this later. Intraday is interesting to you because you can do a short sell and you get margin for your intradays. You don't need to have full fund in your account. Similarly, in futures, you can do short sells in delivery. That means you can hold it for 1 month minimum and 3 months in maximum. You can do short sells in delivery, and you can get margins in futures for delivery in short sell. We'll talk about it later. Today, it's been almost one hour now. Thank you so very much for all your support so far. I really have no words to thank you. Please continue watching our videos, subscribe to our channels, and join our WhatsApp group. We will meet next week. Until then, if you have any questions, please ping me, please message me on my WhatsApp or in emails. We'll stay together, and I want to promise you that we will learn together and we will earn together. We'll see you next week. Till then, it's Vishnu taking a bye. Say, see you. Bye-bye.